Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is November 25th, 2024, and we're diving into Woodward's latest earnings report for fiscal year 2024. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Woodward has reported some impressive numbers this year, and I'm excited to break them down with you.
Revenue and profitability overview. Let's start with the top line. Woodward reported net sales of $855 million for the fourth quarter, a 10% increase from last year, and $3.3 billion for the full fiscal year, up 14%. John, what are the key drivers behind this growth?
Woodward's growth is largely driven by robust demand in both their aerospace and industrial segments. The aerospace segment, in particular, saw significant increases in both commercial and defense OEM sales, thanks to capacity improvements and high aircraft utilization. This has translated into a 6% increase in adjusted EPS for the quarter, reaching $1.41, and a 45% increase for the full year at $60.11.
Segment performance analysis. Woodward's segments have shown varied performance. The aerospace segment reported a 22% increase in revenue for the fourth quarter, while the industrial segment saw a 6% decline. Can you elaborate on these results?
Absolutely. The aerospace segment's strong performance is attributed to increased sales in both commercial and defense markets, with a notable 40% rise in defense OEM sales. This segment also achieved a margin expansion to 19.2%. On the other hand, the industrial segment faced challenges with a 6% revenue decline, primarily due to lower transportation volumes and an unfavorable mix, though partially offset by price realization.
Cash flow and financial position. Turning to cash flow, Woodward reported $142 million in cash from operations for the fourth quarter, a 7% decrease, and free cash flow of $180 million, down 12%. How does this impact their financial position?
Despite the decline in cash flow, Woodward's financial position remains strong. The decrease is mainly due to higher capital expenditures and share repurchases. However, their total debt has increased by 21% to $872 million, which is something to keep an eye on. Overall, their operational cash flow supports their strategic investments and shareholder returns.
Strategic initiatives and future outlook. Woodward has been active in strategic initiatives, including a $55 million transformation of their aerospace MRO facility. What does this mean for their future outlook?
This transformation positions Woodward to capitalize on aftermarket growth, particularly in the aerospace sector. For fiscal 2025, they project revenue between $3.3 billion and $3.5 billion, with EPS guidance of $5.75 to $6.25. Their focus on growth, operational excellence, and innovation is expected to drive shareholder value, despite challenges in the industrial segment, particularly in China.
EPS forecast and analyst consensus. Analysts had forecasted an EPS of $1.22 for the quarter, but Woodward delivered an adjusted EPS of $1.41, beating expectations by 19 cents. How significant is this beat?
This is a substantial beat, reflecting Woodward's strong operational performance and effective cost management. The consensus from 5 analysts had set a lower bar, which Woodward surpassed, showcasing their ability to exceed market expectations and deliver robust financial results.
Key takeaways. In summary, Woodward has delivered a strong fiscal year 2024 with record sales and earnings. Their strategic initiatives and positive outlook for 2025 suggest continued growth. Key takeaways include a 14% increase in revenue to $3.3 billion, a 45% rise in adjusted EPS to $6.11, and a 2025 EPS guidance of $5.75 to $6.25. Thank you for joining us, John.
Thank you. Woodward's performance is impressive, and their strategic focus positions them well for future success.
Thank you for watching Smart Stock Watch. Don't forget to like, share, and subscribe. We'd love to hear your thoughts on Woodward's performance in the comments below.